All right, thank you, Anand, for joining us with those updates. Indian markets have fallen for the second consecutive session on the 1st of April, with Sensex falling 1,400 points and Nifty falling to 23,200 points. Global markets are also feeling the heat, with Dow Jones witnessing wild swings before ending 1% higher, and global markets also closing the worst quarter since 2022. Sensex breached the 85,000 mark in September 24 and since then has fallen to about 76,000 today. Donald Trump's reciprocal tariffs are all set to be announced and implemented on the 2nd of April. So is the market collapse a correction which was looming for long, or are these jitters of the impending tariffs? Dr. Sharat Kohli, senior economist, is joining us live. Mithali Nikore, economist, is live with us. Dr. Jaideep Bhattacharya, President, CDEPR, live with us. Dr. Ajay Dua, former Commerce Secretary, also joins us on the broadcast. Sharat Kohli, let me begin with you first. What do you make of the downwards spiral of the market once again today? What is this attributed to, according to you, Dr. Kohli?
Good afternoon, Uday. Good afternoon to my fellow panelists and NewsX viewers. I think the market tends to discount, the factors much before. That's one. And I think there is a definite uncertainty with regard to 2nd of April. It'll be, in fact, we need to witness one more day, which is tomorrow, where the markets would be in the sphere of uncertainty, because the announcement would come on the second evening, which means that our markets are going to probably discount that on the third morning. So we have another day left, but the markets are quite in a panicky mode. As far as the Indian markets are concerned, the exports which are likely to be impacted by the reciprocal tariff policy. I mean, if I name a few sectors, there could be automotive components, there could be seafood, there could be, leather and apparels, there could be textiles, there could be gems and jewelry, pharmaceuticals, so those are the items on top of the list where reciprocal tariffs may come into effect. However, having said that, I think the reactions to the market may be temporary, because India, at the end of the day, Uday, I'm very sure about this, that India would be a gainer, because the efforts being made by our ministers, Mr. Piyush Goyal and Minister of External Affairs, Mr. S. Jaishankar, in discussions with the US trade representatives, Brendan Lynch was here. There were 3 days of dialogue and discussions, item by item. So I think the willingness which India has shown to probably reduce the tariffs, this will help India in the long run. So we might see a few weeks of volatility here and there. But I think in the long term, and the long term is not very long term, Uday, by the way. I'm talking of probably a month and a half or 2 months, when things will settle down, the dust will settle down. Once the dust settles down, because US has to appreciate the fact that if it goes for a full-fledged reciprocal tariff policy, it's going to create a mayhem and chaos as far as the US economy is concerned, because the inflation is going to go out of control. And I think the common citizen of US is the one who's going to suffer. So I'm sure President Trump is going to realize, and I can bet that somewhere down in the corner of his mind is the fact that he will probably is using this as a tactic to arm twist, so that certain nations, they come on track, they start talking to him, they start reducing, they start appreciating the fact that US has been importing at very high tariffs. So I think this is a method to probably pressurize the world. 200 countries, regional territories and associations is what US is importing from. 200 is the total count. I added them up. And US cannot afford to, impose tariffs on all 200 territories, countries and regional associations and so. Because US doesn't manufacture. If US was capable of manufacturing everything on which it wants to impose tariff, then I think the policy would have gone fine. But that's not the case, which means that US will have to bend down. A soft approach would have to be taken in very near future, Uday, because what will happen is, by my calculation as an economist, in 8 weeks' time, when these goods start landing one by one from other countries, when they get distributed and reach the counters or the shops or wherever are the retail outlets, I think people are going to be in a real trouble as far as inflation is concerned. And we should not forget that US has not been able to overcome inflation even till today. The Fed chairperson, Jerome Powell, has not reduced the interest rate. The interest rates in US are still at 4.25 and 4.5%, which is very high by US economy standards. So I think US cannot afford another wave of inflation, which is barely managed to overcome. And US should also remember that it is not growing at a fantastic pace. The growth rate is barely 1%. little more than here and there 1%. So it's on the brink of sinking into recession. This whole policy can bring US into recession. I'm sure this is counting on the minds of President Trump as well. So therefore, some soft paddling can be seen, in the days to come. But for now, stock markets are in an uncertain mode, which is why you saw what happened today, which is more than 300 points. Nifty was down more than 1300 points. Sensex was down across the board, selling. Only in the small cap index, we saw a little bit of moderate to a neutral trade. But rest, all the indices were down deeply in red today, Uday.
Okay, let me in fact quickly take that to Mitali Nikore. Mitali, as far as of course, the markets are concerned, do you believe this was a correction which was bound to happen, which was, at the end of the day looming large on the stock indices, or can this be directly correlated to the impending tariffs?
So, Uday, I think it's the latter. Very honestly, I don't think this is a correction. I think what we are seeing, the bloodbath that we're seeing across the markets in the emerging economies today, is a direct reaction to the uncertainty that has been artificially created because of the reciprocal tariffs and also the way in which the reciprocal tariffs are being implemented. So, if you think about it, one thing is to impose reciprocal tariffs, but the second thing is to say, till tomorrow night, you won't know if I'm actually doing it or I'm not doing it. And the second thing is that it's not only the reciprocal tariffs, there's also the secondary tariffs which are being applied at a country level. There are also tariffs that are being touted around at a sector level, for example, in the automobile sector. So, very honestly, the kind of environment that is being created in such a way that, stock markets, they don't like uncertainty. And this is the ultimate amount of uncertainty that's being, put together and put forward in the global economy at this stage. So I don't think any emerging economy can be escaping from this, but we will know more in about 2 or 3 days. And very honestly, I agree with Sharad sir where he says that, India is negotiating. The Prime Minister visited the US just, last month, and it was decided that the overall trade relationship between India and US needs to move towards the $500 billion mark by 2030. So at least we have some amount of policy certainty and some amount of a policy direction, and we are doing far better than other emerging economies. But at the same time, this entire discussion around reciprocal tariffs and what India is doing to revise its custom duties is almost, trying to just survive in this uncertain policy environment that is being artificially created.
Okay, let me in fact quickly take that to you as well, Dr. Jaideep Bhattacharya. Dr. Bhattacharya, what do you make of this, second consecutive day for the market in the red? Also, is this something that is going to be the trend for the rest of the week, given that this is the big tariffs week?
By tomorrow we'll get to know what is it that the US administration is going to put tariffs on. So there will be a major swing that will happen tomorrow either way. So the whole bunch of stocks will go up and down. But let's just understand why there is uncertainty in the minds of people. Is because whatever the US administration is going to do tomorrow is going to tear apart the fabric of trade and commerce across the world. If I'm holding on inventory right now, I don't know whether I'll be able to export it to US after April 2nd because of the tariffs that we put in. How long do I need to hold on to that inventory? What will be the inventory holding cost? I don't know any of that. So there will be suddenly a large amount of cost that will be borne on me. Second is, the Indian government has been very proactively reducing the tariffs so that there is less of a confrontation with US. Now, what's happening is that others such as EU are knocking on the doors of India and saying, let's have a trade agreement, let's reduce these tariffs. But if you've already reduced these tariffs, then what is it that we're sitting and talking about? Because you've reduced it for everybody, not just for EU. That creates complications all over the place. Third is that these tariffs are obviously that India is reducing is across the board. Therefore, we can't reduce tariffs on things like cars because then we'll get swamped by the imports coming from China. And largely, there is already a huge amount of dumping that's happening in this country on various products, and especially in the chemical industry, in the pharmaceutical industry. Now, if we go ahead and cut tariffs across the board, then it's going to impact our own industries very, very significantly, because there is predatory pricing happening and a whole bunch of imports will be dumped into India at costs which are lower than the cost of production. And that's going to be very, very damaging, because our industry can't sustain such kind of dumping for a very long time. And our government's reaction, because of the administrative mechanism being put into place, it takes a lot of time for us to really analyze and respond to it and put the dumping duties and so on and so forth. And therefore, what we believe is that looking at these tariffs, the US government will put reciprocal tariffs on us. Let's say they put reciprocal tariff of 100% on all auto and auto components. Now, auto components is a very significant export from India into US. That's going to completely demolish our industry, because the US market is a significant market for our auto component manufacturers. And therefore, unless the BTA, which will then be turned into a free trade agreement, happens, which will be 8-10 months down the line, the industry will face the brunt of it. And that is what the stock market is trying to factor in, that clearly there's uncertainty as well as there is certainty that there is going to be disruption. And that is what the stock market is looking at and saying, we can't take this risk, let's keep the cash with ourselves. And in fact, that's what people like Warren Buffett are doing. They're sitting on a pile of $340 billion, saying we don't know which way the market is going, we'll wait till things get clearer.
Okay, let me in fact quickly also rope back in at this point, Mithali, on of course now Mithali Nikore, the rest of the week. Do you see a volatile week ahead for the market? Okay, I think we're having some connection issues there with Mithali Nikore. Do we have Ajay Dua with us now? Okay, I think Dr. Ajay Dua also we will try and reconnect with. But Dr. Kohli, quickly bringing you in here on the rest of the week ahead. Now, tomorrow, of course, is the big day when those reciprocal tariffs are expected to be announced. Do you expect then a similar volatile day for the market tomorrow, day after, and the day after that? The rest of the week, in other words?
Uday, would be a wait and watch, because tomorrow could just be an extension of today. Sometimes, when the markets get into an oversold territory, we do see some kind of recovery or some kind of moderation, if not the recovery. So tomorrow would be wait and watch, but the real impact would be felt on the morning of the following day, which will be then night in the US, and it will be morning for us. That is when we'll be ready to absorb. So I think it can go either way, because if there is a soft stance taken, then the markets will sharply recover. But if the stance is what is being envisaged right now, that is the reciprocal tariff policy comes across the board in a full-fledged form, I think then the markets may sink deeper into red. So as of now, it'll be very, very predictive, I would say, to say that the markets will go this way or that way. I think we should wait. But overall, as I say, because more interested are the investors and traders who invest in Indian markets, I think the word of advice for them is that they should wait, especially the sectors which I named. I think you can stay away from those sectors for some time. And then, the good thing in the market, Uday, which has happened over the last 2 weeks, is that the FPIs and the FIIs have returned. Although we saw some selling in the previous trading session, which happened on Friday, they were selling. But before that, the FPIs and FIIs had turned around and they were buying, which was not the case from October until middle of March. That was not the case. They were relentlessly selling. But we saw that turnaround happening, and which is good news for the market, which means Indian markets overvaluation has now been removed. A lot of stocks are available at decent prices. The PE ratio is very much under control. The valuation of the stock, the book value as we call it, is very much reasonable. So it is up for purchase now. And I think even the retail investors in India can afford to, enter the market at corrections. It's a very good opportunity for people to go and buy at corrections. The method of purchase should be SIP. When I say SIP, I need not necessarily mean SIP in mutual fund. I mean SIP as a method of investment that is systematically put in smaller amounts at regular intervals. Wait for the corrections to happen. Enter the market at corrections and go for in a piecemeal form, not put the entire chunk at one go. I think that is the advice to investors. So I think rest of the week, barring tomorrow, we will see the reactions coming from day after tomorrow. But tomorrow will be another wait and watch. And unless, of course, another statement comes from President Trump. I remember when he announced 2nd of April, he said, I don't want to put it on 1st of April because then, you don't want to be called as an April Fool or something. So I'm not anticipating a major announcement. But any announcement which comes which says that he's softening the stance, I think will probably help the market recover for tomorrow. And then, of course, day after is going to be the big day when the market would like to absorb this whole impact of reciprocal tariffs.
Okay, let me in fact quickly also in fact bring in Jaideep Bhattacharya once again back onto this conversation, because Jaideep Bhattacharya, the fact of course now is, if we look at the year at large, not just this week but the year has been a very volatile one. Looking at the stock indices, 85,000 what the market of the Sensex had been breached in September 2024. Now it's down to about 76,000 today. What explains that?
So, the Indian economy is fundamentally on a very good wicket. The domestic economy is in a very good wicket. The corporate numbers that were coming in were fairly okay. They were not as good as expected, but on a longer term basis, people were betting on India. FPI was coming in because on a long run basis, this is where growth is supposed to happen. We've already become the fourth largest economy, as I've been saying this entire year on your channel. I mean, since last year. And in 2 years from now, we'll become the third largest economy. We're going in a trajectory which is determined, which is known, and therefore this is the right time to bet on India. However, about 40% of our GDP is entwined with global GDP. So if things are disrupted in the global GDP, such as the wars that's happening in Ukraine, the conflicts in Middle East, the Houthi trouble, which is cutting off the supply chain, and then some nation states going around cutting the fiber optic in the deep sea. So all kind of these mischievous things happening, disasters, war, earthquakes that are happening at very, very frequent intervals start taking a toll. Along with it, the policies of one of the largest economy of on this planet is putting a question mark. And since there is no predictability as to what these policies mean, that's where we see a roller coaster movement of the Sensex and the stock market. Because at one point in time, it's taking the signals from the fact that we are on a good wicket in terms of the Indian economy. Then it starts getting the signals from outside of India. Then the FPI starts taking on money from India. Then the treasury rates in US goes up, and further money is taken out. So there are a whole bunch of signals that are coming in at a very fast pace, and that is what is getting reflected in this roller coaster movement of the Sensex.
Yes, absolutely. Quickly, of course, taking that across once again to ask you, Jaideep, then what would be your advice to potential investors? Sharad just gave his advice. Looking at the way the markets are currently, what would be yours?
Yeah, I think by advice you mean the retail investors, small investors, and my advice will be same as what Dr. Kohli said, that either you invest in SIP, which is small amounts, because there will be a roller coaster movement. Nobody can predict what's going to happen tomorrow, right? In terms of which industries will be taxed. If there'll be tax on pharmaceuticals, that's a large amount of exports that happens from India to US. What kind of supply chain disruptions will happen, we don't know. And therefore, for the retail investors, it will be beyond their information scope to be able to predict which stocks will be going up. So either they sit out of this whole pandemic that's going to happen in the next week or so, or they invest in SIP, because over a period of time, for sure, the Indian stock market will go up, mirroring the growth of the economy. So in the next 1 week will be very tumultuous. Not right for the retail investors to bet in, but on a longer term basis, if somebody is looking at a 1 year, 2 year period, any time is a good time to bet.
And even global markets have felt this as well, Sharad. It's, of course, Dow Jones has witnessed wild swings, but other markets have also been pretty volatile, haven't they? It's not just India.
It is said that if US sneezes, the rest of the world catches cold. So we've seen Dow Jones probably seen one of the worst weeks in the last 3 years, particularly this first quarter from January to March. So that has impacted the rest of the Asian markets. We track CAC, DAX, which is the French and the German market, and the FTSE in the UK. Then we look at the Kospi in Korea. We look at the Hang Seng market in Hong Kong. We look at the Nikkei in Japan. So all these markets, they trail US market. And Indian markets also trail US markets. It's not that Indian markets are totally disassociated with the US markets, but relatively speaking, I have observed over the last couple of years, Indian markets become little independent of US market, which is a good development. They have now increasingly being less dependent on the global markets. Earlier, they used to be taking cues completely from the global market. So because India is a world in itself, and India's domestic consumption, India's 60% domination of domestic consumption in the economy overall, I think that is giving India the edge of not being overly dependent on the world stock market. So we might see a different kind of movement also there. Whereas we might see the US markets continuing to go down, and we still might see the Indian markets continue to steadily rise in the times to come. As I said, this is a transitional phase for Indian market. These reactions are temporary. The market reacts like a child. It discounts the factor much in advance. It recovers. It forgets also very quickly. So I think in the longer run, I am very, very convinced in the longer run, the Indian markets would definitely be beneficiary out of this whole tariff tension. I call this the markets are tariffied and not terrified. So I think Indian markets would be beneficiaries, because at the end of the day, US would have to take goods from somewhere or the other. President Trump's dream of investments coming into US and manufacturing happening in the US cannot be fulfilled. I think he knows that. I'm sure he knows that at the bottom of his heart, that US cannot become a manufacturing economy. Now the cost of production is so high, it will have to depend on importing goods. And no head of the state, Uday, I can say that with a lot of conviction, no head of the state can afford to provide expensive goods to its citizens. So at some point he'll realize, and India especially will be in a very advantageous position, because India has negotiated item by item. And the form of these reciprocal tariffs is also going to be very interesting. Whether he's going to be putting them on an average basis, whether he's going to be putting on a sectoral basis, whether he's going to be putting on an item by item basis. So, the form of reciprocal tariffs is also not very clear. So we'll just need to wait and see.
Okay. Point taken. Well, we're going to leave it at that. My thanks to all of our guests for joining us on this discussion. It's time for a short break.